So Alpine prices just dropped 23%.
The prices dropped
year over year, but buyers right now are swarming. So what gives?
Yeah. And the interest rate market is wreaking havoc, I think, on these pieces, giving more opportunity on both sides of the fence.
It's October already. Jeremy's getting his Spidey suit costume dusted off. So let's do this. So, tale of a very interesting tape. And of course, you know, as we in our little 19 streets behind our 3 gates kind of behave independently of the 901 as a zip, also really curious to see kind of what's happening, you know, zip wide. So 23% drop, just like we said at the top. But here's the interesting thing. And by the way, that was like from it wasn't quite 1.1. It was like 1.07 to like 823 or something. So here's what's interesting though. Pending and closed sales up 67%. So here's what that's telling me.
Big number.
And you tell me if you can see this similarly. It feels like prices have been high for a hot minute. And of course, rates, which means payments, have been high for an even hotter minute. And the confluence of these two things, it was like something had to give. So there was a lot of buyers like strategically kind of sitting on the sidelines, and they needed to see something. Something, 23. So what does that actually happen? In real time, what you have is you have a seller who's trying to sell it at the price, like hold, like Braveheart, hold, right, hold, and then they're not getting it, but they got to sell. So then they go, okay, we got to drop. Okay, we got to drop, and then they find a buyer, and then now this becomes the new anchor of the market, and then you have capitulation and whatever. So now buyers are starting to see that, and they're like, okay, dude, game on. And then boom, you get the spike up. So now on the seller side, you could be like, oh, well, that sucks. You know, it's eroding. I mean, really though?
Right.
Right. Because first of all, it's just like compared to the list price.
Right.
You know what I mean? You don't really, right? But secondly, though, we've made, I think I saw a stat last week. I think America made 57% equity in the last 5 years.
That's a lot.
That's a lot of house money.
Yeah.
Right. So I think it's okay to be able to say, hey, we're finding our new little normal right here before we potentially back off again.
Yeah. And you're talking about things kind of feeling like they're on sale from where those peaks were.
Right.
Same thing with the rate. So you can almost call this like a double sale, right? So we've had the peak pricing maybe slide just a touch, and then you've had rates slide considerably. And so as a buyer, if you're sitting on the sideline, you're thinking, man, not only am I seeing prices soften a little bit, but I'm also like ready to rock because that became cheaper on my monthly payment.
Right.
And it's so cool. This is especially true inside the fences because we're talking about jumbo loans. And jumbo loans have just faced an entire new, I would say, structure right now. And without getting into the big stuff, basically it's important to know that a jumbo loan is a non-conforming loan.
Right.
Conforming means Fannie and Freddie Mac. So if it's outside of that, that means it's an institutional investor deciding how much money they want to make on a chunk of money. These used to feel risky. In this environment, a buyer with 50% down, even though the loan's a couple $1,000,000, man, that sure looks safe right now relative to some of the other investments in the market.
Right. And you're talking about, when you say conforming rate, you're talking about like the dollar amount.
Exactly.
Right? And that thing changes like almost every year, I think?
Every year.
Right. So what is it right now? What's conforming? What's non-conforming?
So to stay out of jumbo, we're just over $1,000,000.
And there you go. Right. So that's like the sweet spot right now.
For the loan.
Yeah, exactly. And so here's where it gets interesting, I think, when we talk about that a little bit. It's like there's two markets happening right now in your neighborhood, in my neighborhood, in every neighborhood across San Diego anyway.
Yeah.
You've got sellers that are pricing at the market, and then you have sellers that are pricing ahead of the market. Okay, now, first of all, we've been able to get away with this empirically forever. Like, you could do your little comps, 90 days, 1 mile radius, you'd be like, that's where I belong.
Yep.
And in some markets, you could even put a modicum on that and be like, well, okay, that's where they were, but I'm even cooler, so I'm going to go a little more, right? And you get away with that. That's not the market that's occurring right now. If you price at the market, you're probably going to sit. You're probably going to get a little bit days on market. It's going to click up, and you get the phone calls, not like, hey, I'm really excited to come see it. You start getting the calls of like, hey, what's wrong with that one, right? And then you got to do adjustments. You got to chase the market. It's not a great poker look, right? Conversely, if you have the sand and strategy and wherewithal to price slightly ahead of the market, what happens is the buyer looks at the same comps and they go, hey, it's supposed to be this. I'm seeing it for this, right? And then you're a diamond or you're a deal, right? So hopefully you're a diamond, and then you got like some nice upgrades and some improvements, got a pool, a backyard though. And then they see that and they go, okay, then they get excited, flips the whole psychological script, and you'll hopefully get multiple people bidding for it at the exact same time. If you can play that card well, you'll end up with more for the thing that you should have deserved in the first place.
Yeah.
But it takes strategy, it takes insight, it takes a little bit of sand.
I was going to say a little guts.
To be able to do that. But that's the market right now.
Yeah. We're also seeing it on the back end where you might imagine that if you hear these numbers, you say, oh, well, things aren't going to appraise for the right amount, right? We've all been in that situation where you're a buyer, the property doesn't appraise for what you're trying to buy it for. Now what? Actually, appraisers are coming in. So we're not seeing low appraisals. In fact, I'm often seeing appraisals a little higher. So the market is still holding up statistically. And individual purchases can handle a little flexibility like that without worrying about being soft.
Yeah. And gang, that's what we try to bring, some type of reasoning and resonance and reckoning and give me one more R.
Responsiveness.
This whole conversation. And that's why we're hanging out with you here inside the 19 streets at the 3 gates inside the RPVs. And so, hey, we will hopefully see you also on the Halloween trick-or-treat thing that we're doing on the trailers and the kids and ridiculous outfits and
Wonder Boy.
Is that that's what I got to be this?
Or Robin.
Oh wow. Okay.
Either one works.
I think I should get out of this quickly before it capitulates further. Gang, thank you so much for hanging out with us. We'll see you next month.